Hello, everyone, and welcome to the next episode of Zebec's Future of Money. Today, we have Trent Sorbe from Kotapay. Trent is the Chief Payments Officer at Kotapay, and Kotapay is one of the leading ACH payment processing companies out there for all things payroll and payments. Trent, great to have you on.
Thanks, Parth. Happy to be here. I look forward to talking with you.
Yeah, we'd love to learn a little more about your background and what it is you do at Kotapay.
Sure. I'm pretty much a lifelong banking and payments professional. Actually got my start in the early 90s right out of college at the FDIC, which of course is one of the primary federal regulators of banks across the country and of course the insurer of all deposits across any bank. Spent some time there, great experience, learned a ton, and then moved over to the banking side of things. But unlike maybe if you're a banker around typical commercial banking or consumer banking, real estate mortgages, my focus has always been on the payment side of things. And so if you think about, in the early 90s, payments were primarily ACH focused if they were electronic or wire transfer, credit cards, but so much has changed over the course of that time. So always been on the payment side of things inside of a banking institution. Today, I'm the Chief Payments Officer at Kotapay, which is the payments division of First International Bank and Trust, which is a North Dakota-based $5.5 billion community bank with offices all over the upper Midwest as well as Arizona. FIBT acquired Kotapay roughly 6 years ago and brought it in-house. At that time, the company was known as Intercept. With the name change, we changed it to Kotapay, made it part of the bank. And really our focus to date has been around supporting payroll processing, direct deposit processing for lots of companies across the country. So right now we're supporting about 3,200 payroll processors who process payments for roughly 100,000 employers and approximately 2.5 million unique employees or consumers that are receiving direct deposit from their employer through Kotapay.
Awesome. Those are quite the numbers.
Yeah, thanks. The company's been around for 30 years. It's really a leader in the space. And so we have a great team, extremely seasoned team, excellent reputation in the market. So it's been a very successful acquisition for FIBT. And, we're excited to think about new forms of payments and new payment rails and still supporting payroll processing. But as we all know, payroll processing is changing and consumer needs are changing. So really enjoy spending time with our clients, trying to understand their needs and their employees' needs going forward.
Awesome. Well, then let's jump right into it. You mentioned the payments industry is rapidly changing. There are a lot of things that change on the regulatory front as well as the technological front. So I guess what are some of the most significant trends that you see are currently shaping the payments industry?
Yeah, I'd be remiss if we didn't talk about the current regulatory environment. Maybe for the first time, regulation has overtaken technology in terms of the degree of change it's forcing in payments. Common phrase from the banking side of payments is banking as a service. And we've seen that term used a lot, particularly really in the last 4 years or so. A lot of those providers that came up 4 years ago or so are finding themselves subject to a lot of regulatory scrutiny. And so those of us that are in the space watch that extremely closely, making sure we understand, where the pain points are, where other providers have found themselves subject to some criticism, and then adapting as necessary to make sure we don't find ourselves in the same situation. So, I think we're probably in a sort of unmatched time when the number of regulatory actions, primarily against banks supporting payments providers across the space, I don't know if it's a record, but it has to be close. It seems like every few weeks we're hearing of a new action. The positive side of that, if there is a positive side, is that it allows the rest of us to really learn and adapt. It allows us to get a sense of where our regulatory friends are seeing the space, where they're thinking that, operations or compliance or those sorts of things could be improved. So, I try to find a positive side to all this and say, look, it's a lot of learnings that we can bring in-house and adapt to support our business and make sure, we have longevity in the space. Like I said, we've been around for 30 years at Kotapay, and the organization FIBT has been owned by the same family for well over 113 years. And so we're very proud of our longevity in both of those areas. And so we view the regulatory environment and regulatory expectations as critical to our staying power going forward.
Yeah, no, that makes complete sense. And I think MTLs, in a way, is sort of like a double-edged sword. Although there are tons of stringent standards and requirements, and it's very time-consuming, they're very costly, and they can be a significant financial burden for smaller payroll companies or payments companies. I think one of the very few benefits is enhanced consumer confidence. I think knowing that there are more laws around payments, given it's an ever-changing industry, and that's more regulated, can increase consumer trust and confidence in services. So when you go to a company like Kotapay, I feel like consumer confidence is at a much higher level. You're willing to have a longer relationship with the customer on top of all the services you already provide. So I think MTL is a double-edged sword. However, I think in the current environment, it does kind of put a lot of smaller payroll and payments companies at risk, in a way, come out of nowhere in such a fast rate.
Yeah, no, I think you touch on it. MTLs are a great example. There's a whole litany of, regulatory requirements that we all deal with, but, MTLs are something that our partners think about all the time. Historically, it has been challenging. As you know, MTL requirements that, vary significantly state to state. And I appreciate your comment about consumer confidence. I think one of the truly brilliant things that FIBT did when they acquired Kotapay was make it part of the bank. And so again, if you have an organization that's been owned by the same family for 100 plus years, it does bring an element of confidence to our partners. It's a unique structure. There aren't many companies that do what Kotapay does within their bank charter. And that was very deliberate because, to your point, we very much wanted to instill a sense of confidence in our partners that here's an organization with staying power. Something as critical as payroll, which for most organizations might be, sort of the most important payment they make to their employees.
Exactly. Yep.
Every 2 weeks. Confidence is critical. And so, yes, I appreciate the comments, and I think you're dead on. I think it has been hard for smaller providers. We're watching some consolidation in the payroll space take place right now as perhaps some smaller providers are saying, look, it's probably reached a point where, the burden on me is exceeding my capacity or my desire in some cases. And so we're watching that consolidation. And, I think regulatory and legal requirements certainly weigh heavy on a lot of owners' minds.
I completely agree. I think another benefit of this is it encourages innovation as well in the industry. And we're seeing a lot of partnerships between traditional financial institutions and fintech companies. As you mentioned, Kotapay partnering with FIBT. That's one great example of it. But yeah, I think the industry is heading in the right direction. I think this just kind of took the whole payroll and payments industry by surprise. Those are a lot of great points you just brought up about collaboration in the payments and fintech space.
One thing I might add,
Yeah.
I think you're right. In these partnerships between sort of a non-bank fintech embedded finance provider, in many cases, maybe even a big brand, and the bank, I think what we're seeing is it's sort of recentering itself. And I think that is extremely appropriate for these times. And I think the role of the bank in those partnerships is changing. I think it has to change. We sort of refer to the current environment in banking as a service a bit as sort of BaaS 1.0. And, we're looking at how do we think about BaaS 2.0, as we expand our footprint and our client base and our technologies. We need to think about it in a 2.0 sort of way, understanding that 1.0 hasn't gone real well for all the reasons we've been talking about. And, what are the learnings? I think one of the learnings there are sort of, like I said, a recentering of the relationship that frankly probably puts the bank in a more significant role operationally, legally, technologically, all those things, because, the bank in the end is the underlying holder in many cases of a deposit. It passes through its deposit insurance to the consumers or the deposit holders. And so those regulatory expectations fall squarely on the shoulders of the bank. And I think in light of that, you're seeing that balance shift a little bit, but I think it's extremely appropriate that it does so.
No, I completely agree. That's great. That's a great point. I hadn't thought of that. So I guess given that the regulatory landscape has been on most people's minds, how would you say companies can stay compliant and updated with these changing payment laws that we just mentioned, especially MTLs?
Like I mentioned before, monitor everything, read everything. take the bad news and learn from it and adapt to your programs as necessary if there are some things you need to adapt. I think you got to find yourself an outstanding banking partner. If your business requires a bank somewhere in the ecosystem to support your product, find someone that, frankly, gives you a foundation to build a business on top of. I've always said, in many cases, the bank becomes the foundation and you're building sort of your entire business on top of it. And so stability, where I think maybe 4 years ago, 5 years ago, speed was the overriding factor, get to market quickly. I can go raise a bunch of money. The market is really hot. I got to get to market quickly. I got to grow as fast as I can. I think tortoise and the hare scenario, we're starting to feel it a little bit. That speed appears to have come to light by sacrificing quality. And so my number one suggestion is find stability before going after speed.
That makes sense. I think when you do that, you're also reducing the risk of getting bit in the butt by future regulatory and just laws in general in the future. You're being more proactive, basically.
Absolutely. And you can't underestimate the cost and the disruption of unexpectedly having to change your bank partner relationship. It grinds a business, whether it's payroll or money transmission or remittances or prepaid card, it runs the gamut, but all of those back there's a bank in there. And when that's disrupted, it brings a business almost to a halt. And then not only that, you're going through the process of conversions and changes. And so it is a very prolonged, painful process that, you should want to avoid at all costs because it's just so incredibly disruptive to, what those businesses would rather be doing. And that is growing and satisfying customers and providing great service. When you have to find a new bank partner, you sort of are grinding your business to a stop. And that's where I think the whole concept of thinking more about staying power long-term, avoiding those, to your point, those oh no moments that might pop up every 3 or 4 years because your bank partner finds themselves in a difficult situation. Avoiding those, it would be interesting to do the analysis on what the opportunity cost is if you're constantly having to change bank partners.
I'm sure that'd be a helpful resource to many of the small payroll and payments companies out there.
Sure. And I think, one thing I'll mention too is as you think about bank partnerships, you have to really start to think about what I sort of always refer to as counterparty risk. You as a payments company and your bank partner might be doing everything right, but there might be another relationship with a company unrelated to you that's there where things aren't going well. Well, there's some blowback risk. If something goes wrong over there, the bank may find itself having to curtail operations or maybe even, leave the space altogether or crank down on volume or increase oversight, all those sorts of things. So there's this counterparty risk that, in addition to finding a bank partner that you feel really good about, really try to understand the rest of their portfolio too, and think about the risks that might be there as well.
Yeah, that's a great point. And while we're on the topic of risk and security and stuff, I guess this leads us to my next question I wanted to ask you. What innovations do you think are being developed to enhance payment security, given all of this chaos, for lack of a better term, in the payments regulatory space?
We were feeling it. We had a confirmation of a massive breach at one of the banks in the payment space that I think is going to have rippling effects all through banking in the U.S. in light of that particular bank's footprint in payments. And so while I think historically we've been thinking about consumer compliance and good disclosures and money transmitter licensing, I think now we're going to bring to the forefront information security and using the latest technologies to protect customer information at all costs. I don't profess to be an information security expert. I'm blessed to have, a fantastic people here at Kotapay and FIBT, but I can tell you it's front and center and maybe one of the most significant risks that we're always mindful of. And so we're constantly, especially now as we're bringing up some new technologies, always having secondary reviews from industry experts, doing code reviews and making sure we feel like companies that might be developing code on our behalf are providing platforms for us to support payments products that technology is there from a security standpoint. So I think maybe the long-winded answer to your question is don't take any assumptions or assurances of security at face value. Double check, recheck, independent reviews, bring in the experts, because in many cases, you're always going to be able to find a couple things that may not feel as, okay, that might be a bit of a stretch from a risk standpoint, but we should do it anyway, right? We're kind of at a point where there isn't any real margin of tolerance. Like, you really have to go to the nth degree from an InfoSec standpoint. I think we're going to learn a lot from the breach and how that went about and what we all need to be doing to adapt to it. I wish, frankly, maybe the best way to summarize that answer is I wish I had the answer. I think it is just constant evolution and trying to stay one step ahead sort of the bad guy, if you will. And that's very hard to do. It's never going to stop. That's the way maybe the best summarize it.
Yeah, so I think, and one of the core focuses of Zebec, at least, is blockchain. And I think blockchain has been one of the prevailing to enhance payment security. So I think that could be an answer to the point you brought up about the bank failure. I think because the blockchain is decentralized and the ledger offers enhanced security, it's reducing the risk of like fraud and tampering. And at Zebec, that's one of the core things we focus on. We use stablecoins as payment rails for a lot of our earned wage access and payroll. And that's proven to be a pretty secure method for transferring money and making payments.
For sure. If you can't put the pieces back together and make anything with them in sort of a decentralized ledger, that's a very tangible way to approach security. And I'm not surprised to hear, all the things that you're doing in that space. We find ourselves, whenever we say those blockchain around a regulator, if it's a regulator that possibly isn't as familiar with the technology, gives them a little anxiety to begin with. But I think, to your point, as you think about how stable coins can be used in forms of security, we can start to see the real value of the service. Probably not have a lot of discussions around the currency side of things, but probably spend more time talking about the blockchain itself and what we can all learn from that. I think it's going to be slow adoption among banks in the US, but I think all signs point to that it might be a very viable method of security going forward.
Yeah, I agree. I think one of the main use cases we've seen for stablecoins and crypto and blockchain so far has been for cross-border and global remittance, given that a lot of currencies, like, for example, in South America, are devalued or aren't the most stable. For example, USDC is proven to be a staple as a payments method. So given that a lot of people in the US like to send money back home, I think the market's valued at about $800 billion to $1 trillion. USDC is proven to be efficient, fast, reduced fees, and just secure overall. Not having to go to a Western Union and pay, for example, a 12% remittance fee, and instead paying 1 to 2 to nothing maybe to send money back home has completely transformed the cross-border and global remittance industry. And I think blockchain will eventually take that use case and apply it to all things payroll and payments in the future. I do think we're still a little early, but it looks like that's the direction we will be heading in, given the success we've seen so far in global remittance and cross-border payments.
I'm glad you bring up remittances, because I think it's been interesting to watch that space, especially, again, over the last 4 or 5 years. If you're coming to market with some form of a payments product, 5 or 6 years ago, remittances were a rare service to be associated with that. That has quickly turned into a must-have. We're in our product development, and we think about new products and services we bring to market. We view remittances as an absolute must, because, to your point, the traffic from US, particularly to Latin America, South America, Africa, all of those geographies, it's just expected anymore. And so we really look at remittances as just an absolute must-have from a product standpoint.
I completely agree. And I think one of the other core points that we feel blockchain and crypto provides is just another choice for consumers to have when it comes to choosing the payment method that they feel most comfortable with. We already have things like digital wallets, contactless payments. And I think USDC and crypto is another option for people that are more, for lack of a better term, technologically versed or just want more security. That's another option that they have to ensure that their needs are being met and that what they look for in payment methods is there. So I think just providing the consumer choice is also a big thing that we've seen. Just consumers feel more confident and more comfortable having more choices and knowing that the choice is in their hands.
I have no response because I completely agree with you, Park. No, I'm serious. I think we're seeing it the same way.
Awesome. Well, I know we're getting to the end of our session, but Trent, just want to take this time again to say thank you for joining our series. This has been a great conversation about all things MTL, payments, payroll, and I guess the future of payments and payroll.
Yeah, thank you so much. We're excited about where this space is going. We're excited to bring new products and technology to this vertical. Payments needs are changing all the time. Our customers are hearing it from their employees on what those expectations are. And so, yeah, we're very excited to be kind of coming along with the industry. So I'm glad to spend some time with you today, and I hope we can do it again soon.
The last thing I'll say is Zebec and PayBridge is happy to be a partner of Kotapay, and we hope to continue that partnership forever.
Absolutely. You guys have been wonderful partners, and so we value their relationship for sure.
Great. Well, thanks again, Trent, and hope to have you on in a future episode.
Thanks, Park.
Oh,